Hey everyone, and welcome to another edition of the Buddy Study Group for Worksite Solutions. And today we're not going to be talking long-term care. We're going to be talking ancillary products. And what we mean by ancillary products in this sense is products that may be offered alongside a flagship offering of long-term care. And Mark, you know as well as I do, as we've been kind of working through our group long-term care journey, we keep getting more and more and more requests for other products. So these products could be something like an accident insurance, it could be something like critical illness, it could be disability, it could be life, hospital indemnity. There are plenty of products out there, more products than we have time, but I think we're going to kind of go through the mindset of the ancillary benefit sale, how you can kind of bootstrap these offerings to a long-term care enrollment, how these products have really good overlap with long-term care, and just kind of how to make the most of those opportunities in your conversations. So, just to get into it, you have any opening remarks, Mark, to
Well,
start?
I will caveat by saying I don't consider myself by any means to be an expert in the ancillary products like
Nope.
we are in the long-term care space. That being said, as we've gotten more exposure to it, I can certainly share some of the ideas that we've heard from some of the folks that are leading
That's
sellers of
okay.
it. Oh, hey, Greg. And also, how we're using it because these products are very diverse and Swiss Army knife. There's a lot of ways to use them. So don't take this to be this is the way that everybody uses it or the market uses it. Just think of it as this is how a long-term care specialist might use it specifically for the types of opportunities that we come across.
Yeah, and I think from not only a sales perspective, but a marketing perspective as well. There are some really, really good overlaps with long-term care, and I definitely echo you, though I have worked in a number of different insurance products in my career. I wouldn't consider myself an expert on any of the ancillary products that we're offering today or that we're working with groups on today. But I think being able to lean on excellent carrier relationships is a key to being able to not only be able to get through the sale, but to understand how to implement the products. I think we're really lucky to have great partners on the carrier side that can really show us along and show you along as you're working through these sales and these products. And I think in the same way, in return, for most of you on this call, you're going to be helping on the long-term care side, your carrier partners, because your knowledge is just that extensive compared to theirs. So it's a nice little mutual relationship that helps you kind of get through these sales. But I want to talk about some of the most popular offerings that we have for ancillary products, or I guess the products that we've seen work really well, or that we see requested, or that we have good experience with. And I think, Mark, though some products are kind of rising up to take the place of these, it really for us started with accident and critical illness plans.
Yeah.
And I think there's a number of benefits that this can offer to a long-term care enrollment. Number one, I mean, just ancillary products in general can really help you on the underwriting side. So some carriers, I know Chubb, for example, is a big one, can offer better underwriting concessions if you add a couple of ancillary products. I know for Allstate as well, they can go down to 3 lives if you offer at least two products. So that's long-term care generally and some other ancillary product like AI, HICI, whatever it may be. But I would say not every group is going to have every employee that's kind of your ideal long-term care candidate, right? So I think there are some middle market, even lower income folks who could gravitate more to something like an accident or critical illness plan because of the affordability.
Yeah, and let's talk about the why there a little bit more, Jason, because that's a
Yeah.
really good point. Why are the carriers looking for us to offer multiple products? they're also trying to spread their risk,
Yep.
right? We're talking about voluntary offerings. So if they're able to get some other products on the books, they also view it as more favorable risk from their perspective. So I think there's definitely a client-facing rationale why we like to offer it, and but we probably first got exposed to it, to your point, because we said, well, in order to get this higher GI amount, you need to offer a second product. Okay. If it's voluntary, what's the big deal with that? Well, you still have to really learn the product, you have to educate on it, and you do have to hit a minimum participation for that product, but the minimums are pretty low as well. So not a big ask, and so it kind of pushed us into that space. But certainly, to your point, we found a lot of ways to have it enhance the long-term care sale at the same time.
Yeah, that's a really good point. They're not going to aggregate participation. They're not going to lump in long-term care, AICI, whatever you're offering together as a shared participation. They're going to have separate participation minimums for each product. So you're right. There is definitely incentive to learning the product, understanding how to position it, understanding how to market it. But I think when we've gone back to groups, especially in the beginning, there was very little resistance to offering some of these other products. And what's there to lose, right? For putting a voluntary offering on the shelf that might serve more people than long-term care. The holistic kind of offering there actually makes it a bit more palatable, right? Even for the employer to know that, hey, people who might not be intrigued or might not be, financially capable to afford a larger long-term care plan might be well served. So it's kind of a way to not leave everybody behind. And I guess to provide a little mindset, a little perspective, Mark, I know you remember what the temperature was like when we decided to kind of make that move into ancillary products. We were nervous to a degree. Brand new products to learn, on the marketing side, we have to understand as a company who for the last 4 or 5 years had really only marketed to long-term care products and long-term care hybrid products, having to understand that new market, having to understand how to actually present those benefits in a sales situation. We were nervous. We had our doubts, but I think it's one of the best things that's happened to us since we entered the group space. And I think that's just for everybody on the call to understand that moving into a new product is going to give everybody some doubts. But if you lean again on your experts and you lean on your good relationships there and you just kind of have open conversations with the groups you're talking about, don't be afraid to offer it. I don't think you're going to meet a lot of resistance.
Yeah, I think the only thing we've run into is they may already have the plans and they don't want to obviously replace the plans that they have. The carriers will want you to get them to replace the plans they have, but the reality is we want to be respectful of their current partners and brokers and understanding, that we're not trying to force it in there. But if there's a compelling motivation, they're not getting participation with those products yet, they may not have a problem with doing that either.
Yeah, and I think one of the things that's Um, we haven't seen a ton of replacement candidates out there for ancillary products, but I think at the end of the day, HR and employers in general are interested in offering the best of the best benefits and whatever that may be. But we've seen some inroads with there's a very specific benefits that one carrier's ancillary product can offer that the employer doesn't have access to through their current plan, right? Or it could be that rates are so much more competitive that it's actually worth evaluating that replacement. So that's a really interesting piece because we don't see that a lot in the long-term care world. We've had plenty of folks come to us with existing Unum plans, and sure, there may be a reason to add another long-term care plan on top because the Unum plan does not offer anything for new hires anymore. But on price, on benefit, we're generally not going to have many credible reasons to replace. So that's something that's a little different from the long-term care space. Um, but I think um, affordability. Let's see, we've got something in the
Yeah.
chat here. Ken
Yeah, and Jason,
asked,
I would say let's go through like some of the products, and case studies, and that's kind of what Ken's asking too is, Why don't we start
Sure.
with one and we'll kind of talk about why it's important and how it complements what we're doing in the long-term care.
Yeah, yeah. Well, short-term disability is a big one if you want to start with that because we've actually seen a pretty interesting niche come out of the short-term disability world. And that's probably the world that's newest to both you and I. I've worked with
Yeah.
long-term, never really with short-term, but
Let
um,
me share my screen real quick, please.
sure, go ahead. Let me get some
We
light
like our
here.
calculators, folks, right? So let's use this kind of to help understand, first of all, a little bit about what is short-term disability. And so several states, like there's about 5 states that have their own state short-term disability programs. In those states, generally, you're not going to offer this product unless there may be some kind of way to opt out of the state program. But the way that we see this is you might have a situation where you have a long-term disability program in place, and it has a 90-day elimination period. And you want to offer something, especially to the younger employees, or we also do this for members of associations that can kind of fill that gap when they have, let's say, student loan debt, when they have the inability to replace that income if they were to go on disability for that first 90 days. And this can be a good gap filler. And the way that this product works is it'll pay you up to $5,000 a month to replace income um, with a cap of 60% of your monthly salary. So this calculator, like let's say we reduce the monthly salary, you'll see that it actually does kind of cap also what you can get in terms of the monthly benefit from the short-term disability and show you kind of how that monthly premium would look. So the idea here is if you're at a lower salary, you can replace up to 60% of your income. As we get to higher salaries, you'll see that that number might drop because of that cap, in terms of what you can get on the monthly benefit side. So it just helps kind of understand, how do we replace income in the event of disability? This plan has the option of 3 or 6 months in terms of that benefit period. You can see you can get a more comprehensive benefit for a 6 month type of plan. That might be a better fit if they don't have long-term disability, and this is an alternative to that. Maybe it wasn't a fit for them, but this might be something that's kind of like a starter plan, if you will, or a gap filler to fit a particular need. And you can choose, in this case, between 7 day, 14 day elimination period. So that's kind of what we're seeing, kind of right now as the use case is for those that can't self-fund that deductible, short-term disability can come in and help to fund that benefit.
Yeah,
Now,
and where
Ken,
we're
you
kind
had,
of,
oh,
oh,
sorry, go ahead.
sorry, where we're kind of seeing a really interesting case study is actually for associations who have recent graduates who are joining the association upon graduating to get access to benefits just like this, right? And
Mhm.
when we talk about those high earning professionals, doctors, dentists, whoever that may be, um, there are student loans that need to be paid when you leave school. And generally for a graduate school to that degree, generally it's a pretty high monthly payment that these folks are responsible for. And if they go on a short-term disability, you want to make sure that they can still kind of keep that same lifestyle, continue to pay their student loans. And this is something that they may even drop in the future, like when, like Mark said, they have the ability to self-fund a short-term disability. Maybe they stick with a long-term disability plan instead. So there are some really unique case studies here. Um,
Jason, let
also,
me let me jump
yeah,
in. And Ken had asked, is there a maternity benefit, which is another big reason why the group they were working with wanted to do this, is this particular plan does have a maternity benefit with a 9 month pre-existing condition limitation. So basically, as long as you're not buying the product after you become pregnant, you can access this for like, family planning purposes. And of course, in terms of especially like think about a small business owner, right? They might not have the ability to replace that income outside of a product like this when they go on maternity leave. This might pay them for that gap. Ken, I don't know if you want to go off mute and ask anything else specific to that, but that was a big motivation for why this particular group also wanted to do this because they had a lot of younger women who were joining this particular profession that they wanted to serve because their long-term disability had did not have a maternity benefit in it. I guess Ken's typing in some stuff. Uh, Ken's asking some more questions about non-occupational coverage only. So I believe it had pretty favorable terms. I have to go back and look, but um, yeah, like you have to look at the ONOC definition. Jason, I don't know if you want to speak to that a little bit more.
I believe we did have an ONOC language on it. I have to actually go back and check myself, to be honest.
Yeah,
But just in that world for everybody on the call, if you don't work with disability too much, ONOC versus NEOC is a very kind of popular pivot point with disability products. So basically, your definition of disability is determined by whether you can't perform the duties of your current job or if you could go out and do another job. So if you had an ENEOC definition, if you could go be a Walmart greeter, if you could go, wait tables, flip burgers, whatever it may be, even if you're a surgeon who just had a broken finger, the disability claim may not pay. But an ONOC definition, again, in that specific example, which um, seems to work well. A surgeon having anything wrong with their finger means they can't be a surgeon until they completely recover. So an ONOC definition would protect you in that case.
right. And I believe it was a positive, favorable language on that. So, in general, what we're seeing in this group market is these gap filling products that do have pretty good definitions and terms and riders that seem to fill the gap that maybe even the individual market may not have available or exclusions, just because of a particular type of group. Like this was a dentist group, and dentists are notoriously difficult to get disability coverage for. So the group side seems to be a little bit more open to it, especially if you're getting a spread of risk. This particular plan also had a 10% minimum participation. So there was a little bit more of a higher level there in terms of the other ancillary products. It'll typically say you need to only get 2 or 3 applications or 10 applications. And for a large group, obviously, that's much more obtainable. This 10%, if you work with a large group, could be quite a lot of applications. But what they let us do is they let us actually carve out and segment the group so we could work with just the newer employees. So, maybe those that had been there for a year, and maybe that was a group of like 500, and that allowed us to kind of target market to them, and getting a 50 applications instead of 500 applications is much more obtainable. So just working with the carrier to get them the spread of risk and target marketing to that group that would most resonate with was kind of an important part of the strategy here.
So to answer your questions, Ken, I went back and double checked. Yes, it is an ONOC definition, which is the more favorable of the two between ONOC and ENEOC. Um, and it looks like this policy may not cover disabilities due to an occupational sickness or injury. So we may be looking at just off the job here.
Yeah, great questions. And this is important for us to learn as well as we go. And so yeah, that sounds like that's the normal way of handling it.
Yep. Yep.
So just this is just an example of one of those products, but I would say every one of our core carriers that offers long-term care, be it Chubb or Allstate, Trustmark, Transamerica, being kind of the top four, like in the Product Buddy tool, also have a short-term disability option.
Yep.
Um, so I couldn't tell you yet at this point how they vary from each other. We're still getting a lot more familiar with them as Jason pointed out, quoting these products on a lot more groups. But you'll start to kind of see they have their sweet spots, just like we see in the long-term care space, they have sweet spots. So if you're looking for a particular clause, like or coverage that you don't see from one carrier, I would just RFP multiple carriers, just like we do with long-term care, and see what their responsiveness is to what your client's needs are specifically.
Yeah. And to add some marketing touch to the calculator, I mean, just above the calculator, you can kind of get an idea of how we're marketing short-term disability, and it's kind of similar to how we're marketing other products like this. We're trying to put the reader in a situation or to understand a situation if this were to happen to them, or in this case, Sarah or Larry in one of our other examples, how is this policy actually going to be there for that person given a certain situation? I think this is done really, really well in our accident indemnity landing pages as well, where we actually show a specific injury and all of the different services that the plan actually pays out for, if you have that, Mark. Yeah, oh, it was Tim, not Larry. So there's this one, two, three kind of showing the process, but I believe we break it down even further, a little farther down. Yeah. So I really like this because if you look at an accident indemnity proposal, it's very hard to kind of understand how the plan might be there for you. It's like a formulary, right? There are certain covered treatments as the result of an accident, and there's all of these different kind of payouts associated with each treatment. So I think it's really important to lay it out like this and to market it like this to understand this is how the plan will actually be there for you in the case of, a certain accident that requires certain treatments. I think this is one of the best pieces we have from a marketing perspective from the ancillary benefits side. And once you look through the proposals, you can kind of understand, everybody has a story of when they had an accident and needed to have some treatment. So that kind of helps you read through the proposal as well.
Yeah, and just to give background to, and many of you may be aware of this, but this voluntary benefits market really has been taking off because of increases to the major medical insurance. So the benefit brokers, are getting increases. They're trying to figure out how do they save their clients money on what they're funding for the health insurance, and maybe they're going to higher deductible health plans. And to fill the gap, they're coming in with products like accident, critical illness, so that they have something that the employees can select at a very affordable cost. So they're not totally out of pocket on the deductible should the unexpected happen, right? And they're indemnity products because the idea is that hopefully they're going to have a good experience, with being able to get a quick payment when that happens. Again, this one's a little bit more complicated and when the carriers are doing the claims adjudication because you do have to submit the emergency room bill so they can kind of figure out and tally up exactly what they owe to you. But generally they're trying to pay out in like, 3 to 10 days, that type of thing after you experience the event. Again, because you're paying a lot of the costs out of pocket if you do have that high deductible health plan. So that's another way to think of it for your groups. We also think of it though in terms of long-term care and how do we complement the long-term care conversation. So we have found, like Jason was saying, you have maybe younger employees that long-term care doesn't resonate as much, but they have families, and this may make a lot of sense for their kids that might get injured, right, in sports, that type of situation. Or there's a 90-day elimination period on your policy, and maybe this is going to help fill a gap that you're going to have to pay out of pocket even when you have a long-term care type of disability or event. So I think those are, ways that we start to see how you can package the products together where that story plays out where, okay, if this happens to you at a very early period, you're going to get something paid to you that's going to at least be a little bit of a stopgap. Even if it's not a huge amount of money, it's still going to, a little bit can go a long way, as we always say, even when you're buying long-term care benefits.
Yeah, and it actually helps you kind of explain long-term care from a 101 perspective if you're offering other products like this alongside it, right? Understanding the concept of treatment versus care, right? If you have an accident and you receive immediate treatment for it, an accident plan can help you cover that accident, that treatment. But if you need care ongoing, that's where long-term care can kind of help fill in the gaps from the residuals of that accident. And same thing with long-term care claims potentially being the result of a critical illness, right? Having that lump sum payment there can help you get through an elimination period, but also help you pay for that treatment that you're going to be receiving as a result of the critical illness at that moment, right? So there's lots of benefits and it really helps make a holistic financial plan. And we even, Wendy and I actually started talking about this topic outwardly on webinars a little more because we kept getting the question so often. I have disability. Why do I need long-term care? Are they the same thing? Are they different? So there are a lot of questions as to how these plans actually work together, and it's actually really synergistic.
Yeah. Yeah, I think critical illness especially plays very well with the long-term care story. And as you can see, the accident, we didn't go into the pricing too much, but usually we're seeing, $6 to $20 a month of premium. Very, very affordable premium. Is going to be a lot less than your average long-term care premium. Critical illness the same way. You have different levels of coverage. This is actually the maximum level of coverage for a 45-year-old. But again, $41 a month. They all kind of differ in terms of whether they're issue age or attained age. This is actually an attained age, so it does increase every 5-year age bands.
5 years, yep.
But the same concept applies, which is how do you make sure that if you're diagnosed with a critical illness, a lot of those costs may not be borne by your health plan. Even if like you have to go to an in-network doctor and you get diagnosed with cancer and you want to go to a specialty type of hospital to get treated, you may have to travel to do that. There may be out-of-pocket costs for yourself and your family
Right.
for traveling, hotels, the medical itself. And again, $30,000 cash payment is going to go a long way to filling again that gap that might happen.
Super good point because I've had a number of close friends. San Diego actually has a really top of the line breast cancer treatment program at one of our local hospitals. And let me tell you, it's expensive to get here and it's expensive to stay here. And with the medical treatment on top of it, that lump sum can really come in handy. And what you're probably about to go over is my favorite piece of the AI and CI plans that we have this premium flexibility or coverage flexibility. You can cover yourself, you can cover yourself and your spouse. In the case of, maybe a household where you've had a separation, just covering yourself and your children, and then yourself plus your entire family, so spouse and any number of children. So you'll see as we kind of go up in the calculator to each of the different kind of coverage levels, how affordable that is given how many people may be included in some of these coverage levels.
Yeah, I know, Joe, you had written in the chat that you spent a lot of years working in this space for Colonial Life. Anything that you would want to share just in terms of how you would offer the ancillary voluntary products to your clients?
I would just say it's really, really important to read the policy. As with, anything else that we sell, because some critical illness policies do not include cancer. Some of them do include cancer. Cancer can be a separate policy. With the policies that I sold, cancer was really not a lump sum benefit. It was more of a benefit where there were indemnity things loaded into that. So they pay out for radiation, they pay out for chemo, they pay out if you had to stay in a hotel. But again, just like with long-term care, document, document, document. You have to have, everything to document that you actually incurred an expense in most cases. Now, there are some lump sum benefits out there that you don't have to show that you incurred an expense, but it's just a matter of understanding what you're selling and making sure that the client understands what they're buying as well.
Super, super good point. Yeah, and you can even see just reading through the brochure here, different critical illnesses can have different payout levels. They'll actually be ascribed a percentage or an actual cash amount in the case of some conditions. So I echo that completely. Read the contract inside and out as much as you can, ask as many questions as you can about these plans because it definitely does make a difference, especially, if you're an employee that's looking at this plan that has a specific family history, right? You want to make sure that what you have a family history for, is covered, or
Right.
um, just trying to put yourself in the shoes of a certain critical illness situation, right? What logistics may I have to undergo as part of treatment for any of these?
And I would just say that my experience with Colonial is, you do not get a lot of time to spend with these employees, right? And employees hear what they want to hear, not necessarily what you're telling them. So, when it comes to these types of benefits, as you can see, there are a lot of moving parts. And sometimes it can be difficult to make sure that, that you're doing the very best that you can to explain what they're buying, given the amount of time that you're being allowed to speak to that person.
Yep. Love it. Now,
You're
what
there at the discretion or at the pleasure of the employer, right?
right, right. What products would you say you worked with most in your time?
I would say that the most popular products that I ever sold was short-term disability, and then probably if it was a family, then the accident was really popular, especially for if they had kids that played sports. Again, you got to be sure, is there a sports exclusion in there, right? Colonial didn't have that, but some of them do. Um, I had one woman that literally made money off of an accident policy because of how many times she took her kids to the emergency room. Because again, it's got nothing to do with how much was the claim and how much did your insurance pay. In most cases, these policies are going to pay directly to you. So, not that you're supposed to make money off of them, but she was quite proud to tell me that day, that she was actually making money off of that policy.
Well, it's
So.
interesting that you mention it too, because I haven't seen a plan to this point in my rather limited experience that has a sports exclusion, but actually in the case of Chubb's accident plan, we see them leaning in the completely opposite end of the spectrum and actually paying out a higher percentage of a claim if
Right.
the claim is the result of organized sports. So
Mm,
very interesting. There is a lot of variance in this
yeah.
market.
Yeah.
Yeah, there's also a lot of customization. They will actually personally customize these plans for the group in
Yep.
terms of what levels of coverage they are, and they'll actually price them to what benefits that you want to include. So definitely talk to your carrier rep about that. They're also going to be kind of an expert, like Joe was talking about in these products, because this is their kind of bread and butter that they work with almost every group every day, and they see what groups are doing in terms of the designs that are the better fits. So you don't have to figure this all out yourself. You can also consult with your carrier partners. Their brochures are also quite good in this area, much more so than in the long-term care, as you might expect. So we
Yep.
have to build our own education and around that. But you can lean on their brochures a lot more because they're really well done.
Yeah, agreed. And it's it's all about how I think of it is what levers are you pulling as a carrier to make sure that you can price the product adequately, ensure acceptable risk and, at the end of the day, continue to be able to keep your promises, right? It's the same thing in the long-term care market. What levers are we going to pull? Are we going to be a little bit higher priced? Are we going to give a cap on benefits? Are we going to have some sort of pre-existing condition clause? Are we going to drop the death benefit after a certain amount of years? Are we going to go off of an assumed interest rate, whatever it may be, whatever levers that they're going to pull, it's dialed in to make sure the product is where they're comfortable. And there's a lot more levers to pull with plans like this because it can really pivot around specific conditions based on what they know from claims data and just aggregated health data, right? So that's really to Joe's point, read as finely as you can through some of these things because there's just so many levers to pull and carriers differ so much from each other. In the past month or so, I would say we had every one of our carrier wholesalers on Zoom meetings, and we just kind of asked, hey, can you give us the lowdown on your ancillary products? And there were there was a lot of differentiation between each of the carriers, and every carrier had a different selling point, or we believe this is the strongest, most differentiated part of our product, which I thought was very interesting, but it is a lot to keep up with. So I would say kind of listening to your client when you're actually in the sale and understanding what they want out of these sorts of plans will really help you find the right carrier because you can then ask your wholesalers about it.
Yeah, let me jump into life insurance too. And I know everyone probably on this call is familiar with, term permanent life insurance. The group side, you have the same types of products. There is like a core benefit, which is that basic term life that the employer pays for, usually up to 50,000. And that's what they call an annual renewable term, meaning that each year the carrier can look at what death claims are paying out and they can choose to raise rates on the whole block of business. So it's only really a guaranteed rate for a 1 year period of time. Of course, it's a very inexpensive benefit. And I'll call it the ancillary part of that is that some of them allow you to buy up voluntary higher amounts of coverage. But again, you're going to have that same limitation that the rates aren't guaranteed for the long term, and the benefits tend to reduce at retirement age. So you'll see like the death benefit shrinks dramatically. So it really is designed to be more of a benefit while you're working in your working years. But many of the carriers now also have term to age 100 or term to age 121 life insurance. In fact, we know a lot about the term to 121 because we have four of those products that are actually the base plan for the long-term care extension riders. And so we offer those as long-term care first and the life insurance is secondary. But you can offer those products without the LTC riders and just offer a term to 121, which is a very unique concept when you think about you can't really offer that term product in the individual space at all. You don't see that in the market where you're usually going to buy a 10, 20, or 30-year term. But let's say you're working with a 30 or 40-year-old, where do you find an 80-year term, right? Um, at a level premium rate, right? That's designed to stay level through the life of the contract. So in those cases, really those are designed to be more of a, they call it perm term, right? A permanent type of product, but built on a term, no cash value chassis. And that could be an opportunity, both because it's guaranteed issue, just like, the long-term care products are in the group space, but also because you're offering a very unique product they can't get in the individual market. But do expect it to be more expensive for the same face amount as a fully underwritten, 20-year term, right? You're getting a lot more guarantees provided there. Um, but you're tending to buy less base amount on these group products than you would in the individual space, right? 25,000 upwards of 150,000, but not like you're not going to get like a 500,000 or $1 million base amount. So we think, at a group level, you are going to find a lot of takers on that, even if it's buying kind of like a small life insurance policy. And again, for those that don't have any life insurance and those that are younger ages, it's going to be both inexpensive and convenient to be able to just add it into your shopping cart when you're buying the other products that you're offering, including the long-term care. So from our perspective, that's just a win-win as long as you can educate them on it and you don't take them away from what you're doing with your core enrollment or your long-term care enrollment.
Yeah, I mirror what you said there about not being able to access it on the individual market. I own some term to age 80, and every year it prods me to strongly consider converting it because of how much the premium goes up every year. So that's a huge advantage to be able to access that in the group space under favorable conditions, and they kind of run a little bit like a GUL, right? Like designed to run cash values at zero, essentially, or near zero, to keep the plan in place for as long as possible.
Yeah, Joe has brings up a good point, which is all of these products that we offer tend to be portable, meaning that if you leave your employer or if you retire, you can actually take them with you in many cases. But they all differ a little bit, and you do want to read the contracts. Sometimes, like they'll say, if you take it to another, if you get another job, you can continue it if you're still employed, but if you retire, you can't take it, or maybe at a certain age. So they're all a bit different, but the ones that we're talking about, the term to 100 and term to 121, tend to be fully portable and tend to not change the rate when you port it, which is really key. It like Jason was saying, if you're going to see the rate go up tenfold when you take it with you, then you're only going to take it with you if you have a really terminal type of condition, maybe, or uninsurable type of condition. But if the rates don't change, then someone's buying it with the intention to keep it, and it's really going to be something that is permanent for them, addition to any other policies that they buy, that they're adding on top of that. So great point though, to look at that language. And again, each carrier is a little bit different, but the ones that we've been working with that offer the long-term care, for the most part, we're seeing pretty favorable terms with how they port it. And it's not something where it disappears as soon as you leave your employer.
Any other interesting products you've come across in your travels in the group space, Mark?
Yeah, there's quite a few.
There's a ton.
I would say in particular, I've seen the most variety with Transamerican Allstate. I'm still, frankly, like I said, I'm not an expert in all the products or even the ones here. We're still learning a lot about them, but they have gap insurance, which is kind of like a major medical type of filler to the deductible. One of the carriers has a Medicare supplement plan. Some of them are doing both group and individual products, even though it's the worksite division. They file them both ways. So there's quite a lot out there. Hospital indemnity we didn't talk about a lot, but it's similar, in structure to the accident critical illness. There tend to be a little bit tighter on underwriting on hospital indemnity though, right? Because it's tend to have a little bit more utilization and abuse in the past. So they're going to be more particular about which groups they offer it to. So I would say if I were, kind of in your shoes, the easiest way to do this is to, get kind of the temperature of the client in terms of are they okay with you offering multiple benefits? Get your foot in the door with long-term care. By far, that has been our biggest selling point is hardly any group has it. There's huge, need like we've talked about in caregiving and interest and opportunity. As soon as you build that trust, though, they're going to look at your recommendations very seriously. And I would definitely try to add those other benefits. And sometimes, like we talked about, the carrier kind of leads you in that direction by giving you better offers for the long-term care if you add the other products. But just add them to your quote. So we basically say in our RFP request is we'd like to proactively offer these products. So we're kind of like signaling to the carrier that we're going to offer long-term care no matter what, but give us a quote for those other ones so we can at least position it with the client and we have it in our back pocket so we know what to expect there, what the minimum participation is going to be, what the terms are going to look like. So you don't have to be an expert in it. They'll give you kind of their recommended quote, and then you can go back to them and get a revised quote once you learn what the client's looking for a little bit more specifically. But I would say most quotes these days we try to do aren't just standalone long-term care, but usually we're trying to quote three, four, five products just so we have them available to us, when the time is right to bring them up.
Yeah, I mean, all of these relationships that we're working with ancillary products has started with somebody who's part of that relationship working with us on long-term care. And, 9 times out of 10 has been you hang up from a phone call and you think of a good question the moment you hang up, right? Well, we do a long-term care enrollment and, that relationship owner turns back around and says, "Hey, while we're here, do you know anything about short-term disability or do you have a good contact for accident indemnity, whatever it may be?" Once, like Mark said, you build that relationship over time, issues are going to come up in HR or at the employer that need to be weighed in on. And they're going to turn over every stone to make sure that they're kind of getting the best deal and getting the best plan in place for their employees. So just by adding yourself as a trusted person in that relationship, you're going to end up being asked about one benefit or another at some point. That's kind of what being in the group space can do for you. And it's if you're a lifelong learner, which I'm sure you are, if you are in the long-term care market, very entrenched, uh, you'll find it really interesting to dig into some of these benefits and really kind of compare and contrast. I think that's all I really wanted to talk about. Um, Anybody have any other questions, any other comments?
Joe is also adding about the premium levels, and that's a great point. A lot of these voluntary benefits have an issue age structure, meaning that you get one price based on your current age, and then that rate stays the same throughout the rest of, the policy life. Some of them have an attained age structure where it may increase every 5 years, and some carriers allow you to quote both of those structures and choose between them. So there is a lot of nuance to that, and it's important to know that because if you're comparing A to B, you don't want it to be issue age versus attained age, and you're not comparing apples to apples. As you can imagine, the attained age pricing is going to start lower but end up higher. So yeah, great point there. It's something to check out for. Of course, with the long-term care and the term life, the long-term care, or the permanent long-term care, those rates are designed to be issue age by virtually all the carriers we work with. Gen's asking about dental. Yes, you can do dental and vision with many of these carriers as well. So definitely something to check out. We have not done much of that to date, but that's another, core benefit that is pretty common add-on. And I think with those products, the carriers, there's starting to be like sweet spots where certain carriers offer them more often. We don't see that as much with our LTC carriers, which is why we haven't done a lot with it yet. But a lot of the other group carriers do have those products. And the carriers that are in the dental world, like the MetLifes, the Guardians, those tend to be the leading sellers of dental and vision. Great point, Ken.
One other thing to just kind of mention is you may see it with long-term care, but you're going to see it a lot more with other ancillary benefits. It's pre-existing conditions clauses. And that's one thing to really look out for as well. That's another lever that you can pull on a product. So that's just one thing I would look out for when if you're looking over a proposal. Sometimes you'll see 612, sometimes you'll see 1212, and I always get the question, what does that mean? So let's say you have a 612 pre-existing condition clause. If you have a claim within the first 12 months, the carrier can look back 6 months to see if you had that condition or were suffering from that condition already, and they can contest that claim if you did prove to have that pre-existing condition within that time frame. So that's something to look out for. That's a question we get on a lot of webinars. What if I have a pre-existing condition? We do have, I think, at least one long-term care plan out there that does have a pre-X clause. So that's a really important question to answer because you know, you want to be able to give the right answers to someone when the rubber meets the road. And it's not to say that, that person will be without coverage throughout the life of their ownership of the policy. It's just that they're going to have a certain amount of time to wait in some cases before the plan will actually pay out a claim for them.
Yeah, it's pretty rare that it actually will impact your client for long-term care just
Right.
because, the vast majority of people are not going on long-term care claim in the first 12 months
It's based
buying
on
a
the
policy anyway.
claim definition,
Yeah.
right?
But they do it obviously it does make sense for a lot of benefits like a life insurance benefit, for example, right? If somebody is like working but they're terminally ill, diagnosed, they're not going to want to have to pay out a huge death claim in the first 12 months from a known condition. Same with critical illness, right? If you've got cancer, they're not going to want you to apply for a critical illness policy that covers cancer when you already have cancer and pay out for sure a large claim. So those are the policies where you see it very commonly because that's kind of the risk that they need to screen out to make sure it's affordable for everyone else.
But you know what, Mark? I've already had an employee situation where the pre-existing condition clause
Hmm.
actually came into effect. It was somebody who was very young and bound to a wheelchair, and they had the coverage, found out that there was a pre-existing condition clause, kind of had a freak out moment, contacted one of my specialist consultants who contacted me. And, it was actually a lot of relief for them to understand that you just have to wait until February and you can actually start to utilize your coverage. In their mind, they were worried that they were never going to see any level of coverage from the policy. So it doesn't come up often, but it will come up. Yeah, Wendy.
Hey, yeah, I just wanted to add this in. When they're guaranteed issue, no underwriting, and then somebody goes on claim, right? 6 months, 8 months, 3 months later, knowing that, let's just say the person knew that there was something, but I get the guaranteed issue, so I'm going to do it because I've got something going on and I don't know what it is. So they file a claim 6 months in. Then the carrier goes back how many years to look at their medical records?
Well, that's what the illustration is generally going to tell you, or
But
generally what you can work through in the plan design with the carriers. Sometimes the pre-X that you see is not the only pre-X definition that they can offer. So a more Cadillac plan is going to have a
yeah,
smaller pre-existing condition window, and generally to save some premium, there are larger pre-X windows.
and
But
it can make it difficult, right? I mean, we know that it can make it
that's the
difficult.
risk you take
Like,
on for offering a guaranteed issue
you're like,
product.
wait a minute, it's guaranteed issue. There's no underwriting, but yet there is underwriting if I file a claim within a certain period of time. So it's really important that
Mhm.
clients know that.
Well, you still need also help with your activities of daily living,
Right.
Sure,
right, to trigger the benefits
sure,
Yep.
and a licensed provider that unlocks the indemnity benefits. So it's not like, hey, we're just going to pay you cash
right,
without
right,
needing care. So a lot of those situations also don't need care yet, but may need care in the future. That's what I
Right.
would expect there.
Yeah,
But
and Joe makes a good point that it's essentially kind of like an extended elimination period
right, right.
that you have to wait. They're going to collect 12 months of premium from you, but you will be eligible to claim once that pre-existing condition window has been met.
yeah, and in terms of where they look back, that's what that kind of the pre-X says, that like Jason was saying, that first number, 6 or 12 months usually. But they can contest claims up to 2 years. So I always try to encourage people, especially also, when you're offering this to groups, is don't do it for one specific individual. I know that that's oftentimes your advocate or the rationale, but you do want to make sure you're getting the group involved. That's why they have minimum participation requirements. These products are not really designed where let's go ahead and try to get this one person coverage and offer it to everyone, but not
Right.
really get much going on there. So I think they have some pretty good screens for that, but they could also contest the claims or they can not provide you the coverage if you don't hit the participation. And then you end up with egg on your face and it's not a good scenario for anybody. Or it could get even into a legal type of situation you want to avoid. So I would try to stay away from, focusing on those things. But to Jason's point, they price it to get some degree of adverse selection. So if that is what happens when you're offering it, especially to a larger group, that's not something to be afraid of.
Yeah. So I want to be able to kick it to Gretchen before we wrap here, but just to leave everybody with the mindset, um, I know most of you who are on this call and work with you a lot, you are some of the foremost experts in long-term care, and through having group long-term care conversations and implementing group long-term care, you're going to earn trust. By earning trust, you're going to get asked questions about other products, and you have a team of people, not just us, but carrier wholesalers as well, who are there to help you become an expert and offer expert advice and an expert service on these products. So don't be afraid of the conversation. I would say start with what you know best and let the relationship kind of take you into the rest, because there's a lot out there that's waiting for you, and there's a lot more people that you can help beyond just long-term care. But obviously, for many of us, that's our bread and butter, that's our ticket in. So that's it. Gretchen,
I'm
what
going
do
to
you got for us?
actually, I'm going to actually expand on what you just said, and uh, get more into actually how you would position offering more than one product. Like Mark said, you're going to lead with whatever your bread and butter product is. But if you're running your business through Buddy, we're adding new product information all the time, and we're adding new products all the time. And right now we have an enrollment going on with a non-LTC product, as the only product they're offering, with the intent of offering long-term care later on down the road. So how do we position when you are offering more than one product? Um, like I said, you usually lead off with whatever it is your main product is. But if you're offering other products, and you're doing it through us, we would have a page set up that would highlight each of the products, and then the person enrolling selects which one is the right one for them. But you can also, let's say long-term care is your lead product. You can just, the way the pages are set up, you'll just be able to point them right to this page, or right to the calculator page. So there's a lot of ways that we can position these products, and so that's something that we'll work with you on. And as we talk about the enrollment process and the communication process, and we're never going to just leave you alone. We're going to try to figure this out and figure out what's best for the organization, especially if it's outside of like a traditional open enrollment, and you're offering three products. All of a sudden, just dropping three products on a group of employees or something. So we want to make sure that that messaging is a good journey, and that it makes sense. So, but you're generally speaking always going to lead with whatever your bread and butter product is, or the product that is going to be probably the most successful out of the gate.
Yeah, I think that's really important, is not to throw all of the products at your clients at the same time, because they will end up doing nothing a lot of the
Yeah,
time because they don't
yeah,
understand what they're being shown.
yep.
We're going to try to also aggregate a lot of the information that we're gathering on all of the ancillary products outside of long-term care. So I think you'll probably see that in the future at some point in the buddy system. Even though, of course, LTC is still the main focus, we want you to have kind of easy access, at your fingertips to that. Because just like everything else, sometimes it's hard to extract it from the carrier when you need it. They'll give it to you on a proposal, though. That's why I say do an RFP, because then you'll get what you need because you have a live case. But it is a little bit harder sometimes to get that information if you don't have a case at the ready.
100%. It's like trying to get blood from a slab of concrete sometimes. But that's what we're here for, right? And can everybody just do me a favor before you head off today? Just give a happy belated birthday to Mark, Gretchen, and Wendy, because we up and decided that everybody who works here should have a March birthday, and all these guys had their birthday within the last 2 weeks, and Gretchen yesterday. So, hey, that's pretty cool. In the chat, it
Thank
brings up
you,
cakes
Casey.
automatically. That's pretty neat. I like that. Is that what the whole Zoom update is that keeps crashing whenever you're trying to get into a meeting? They had to download all the cakes for whenever somebody says happy birthday. Interesting.
Happy
That's awesome.
birthday.
Thank you. All these Pisces. Love it.
That's right. Anything else from anybody before I kick everybody out of here? Awesome. All right. Well, we appreciate you being here with us today. Hopefully, you took a thing or two that you can take with you into your other conversations, or file away for later. We really appreciate it. Everybody be well, and we will see you this time next week. Have a good one.
Bye.